and welcome to the SoFlo Real Estate Show. I am so excited to have you here. It is Monday, October 16th. And one of the reasons I really love this show is because I can talk about relevant information and relevant questions my clients are having, whether you're buyers or sellers, remodeling your home, it doesn't matter. But today, because we're having so many buyers finance homes here in South Florida, one of the questions I'm getting is, what are mortgage escrows? Do I want them? And what do I do with it? How does this happen? And I'm just so confused. So today's topic, I am so excited to bring on one of my guest hosts, and she's always really fabulous to be here, is Julie Dinda. And we're going to talk about mortgage escrows and whether or not they might make sense for you. My name is Athena Chalikas Barocas. I'm a top producer and award-winning realtor with Coldwell Banker here in sunny South Florida. I'm also the producer and the hostess of the SoFlo Real Estate Show. So, Julie, I want to welcome you back to the show. Julie Dinda of Radius Group. It's great to have you here, Julie.
Thanks. Always a pleasure.
It is always a pleasure. Can you believe we are deep into October?
I cannot.
No,
And the weather
no.
is not helping me.
No, here in sunny South Florida, we forget what season it really is until you go to Home Depot like I did, and I realized Christmas is coming very, very soon. So I
I
was
know.
like, oh,
Right behind all the
holiday.
Halloween stuff. Right behind all the Halloween
It's
stuff.
true. It's crazy. But listen, I want to get to it. But before we do, it is Monday, and I love to give my audience just an update on what's going on with the mortgage rates and what you might see coming in the next week or so.
So I think the mortgage rates themselves have pretty much been, with all the craziness that's going on in the world today and with inflation, looming, we haven't seen a huge hike in rates, which is great. We're kind of staying at that consistent, average over the, average interest rates, I would say. Yeah.
Yeah, where are they falling right now if a client were to go on
So
to,
I
the
locked,
internet?
I locked yesterday at 7.5 to like 7.9, range there.
Right
I
in
had
there.
someone, right in there. I had someone buy it down to 7. So anywhere between 7 and 8 is where we're at right now.
Okay, all right. And I saw that, the Feds are not planning on increasing the rate this time, but they are predicting maybe one more rate increase before the end of the year. And
Yes.
hopefully we'll be at the peak so we can start to see something different in 2024.
Yes. And and we all know that with the elections and everything, I'm sure rates will, start going down. So it's great to hear, it's great to start planning now.
I agree with you. I agree. And for all of our viewers, we have some great podcasts on the channel talking about buy downs, whether it's temporary buy downs or permanent buy downs. So take a look and you can maybe knock off 3% with the buy down. So there are some great options out there. So Julie, let's get to it. Mortgage escrows. Oh my gosh, when we had all those cash buyers but in today's world, even with almost 8%, many of the buyers are financing. And so now I'm getting questions of, hey, Athena, what's this mortgage escrow they want me to put in? Do I want to do it? And help me understand it. So I thought today with you, Julie, we can kind of dive into that topic a little bit.
Yeah, and I think it's also a little tough because most of the time people don't even really know what escrow is. So it's everyone knows they have to come with a down payment. Everyone knows they have to pay, obviously the attorney and everyone for doing everything. But the escrow always seems to be something that people are either saying like, I don't want that, or I don't know what that is, or, can you kind of dive a little bit, deeper into it? So I definitely love that we're talking about it, and I'm excited to dive into that with you.
Good. So give us an overview of what an escrow is, first of all.
Okay, so there's two different ways to think that an escrow will be brought up in your home buying process. So first thing I would talk about is the mortgage escrows. So mortgaging escrows, so these are ongoing financial accounts used for managing specific, expenses related to home ownership. And home in escrow is actually for real estate. So this is a temporary phase in the home buying process when a property is reserved for a buyer, but the transaction's actually still pending that finalization.
Right. So that's what we always say. It's an escrow. That's how we, term homes when a buyer's buying it. But the mortgage escrow, that's where we're talking about how a bank will pay on behalf of, I'm going to let you get into this, but a bank will pay a homeowner's property taxes and homeowner's insurance on a monthly basis. And, they go, do I really want that? Is that something I want the lender to do?
Yeah,
And so, you know what? Let's
escrows are
educate them because there are so many pros to this process.
correct. So escrows are actually separate accounts that are actually managed by your mortgage lender. So they're used to hold funds for property related to typically your property taxes, your homeowner's insurance. The funds in escrow are typically collected as part of your monthly mortgage payment.
Correct. So let's talk about, why this came to be. Why are lenders decided, years ago that this is a good thing for everybody? There is something in it for the lender. Normally it's because, the lender owns the home with the buyer.
Correct. So typically what happens is it's kind of like the process itself. It helps you to avoid those large, unexpected bills, and it ensures that your property is always paid for. So, the reason that they do it essentially is because the bank still owns your property. So if a hurricane comes and the house gets knocked out, the bank essentially owns the property until you make that last payment. So they want to make sure that the property that they own is secured, and if there's any issues or anything that happens, that it's good to go. Another thing is for collecting on your property taxes. The reason they do that is because if you don't pay your property taxes, they can actually put your house up and sell your actual house. Like they can foreclose on the property because you're not paying the taxes on the house. So they want to make sure that those two things do not happen. So that's why they actually give you better rates if you use the espresso, or I'm sorry, the espresso, the escrow part of it. And they also they
The
give you kind
escrow.
of better rates and terms. Maybe I need some espresso. I need some espresso today.
Oh, you're so cute. But just to kind of wrap that back around, there is something in it for the lender in order to do this because they are a partner in the ownership of the home. And they're just as concerned that your property taxes are getting paid on time and that you're maintaining a homeowner's insurance policy that's in the best interest of the home that both of you have ownership in at the moment. And so with that comes, as Julie mentioned, perhaps a little bit better of a rate if you have an escrowed account. Some of the things that are really beneficial for the homeowner, now that we've talked about what's beneficial for the lender, what's beneficial for the homeowner is they have predictable payments. So as a
Yep.
payment, every month your payment is going to be X. And you don't have to worry about coming up with a savings account for your taxes or worrying about what your monthly payment's going, making your monthly payment for homeowners insurance because it can be quite expensive down here in South Florida. You're avoiding late fees, which is fabulous, because a day late can be an extra 100, 200, $300 on your monthly payment. And with the escrows, you can actually finance something else that you want to save for. You're no longer worried or preoccupied as a homeowner of whether or not you have to make a large payment. So there are some really good benefits to the homeowner when they do use the escrow account. What
Yeah,
are
the
you finding,
financial
Julie?
planning.
Yeah.
Yeah, the financial planning on the side of it is actually very great too, because with escrow, when you're budgeting, they become more manageable. As you know, there's necessary property expenses that occur. Your AC goes or something like that. And so you want to make sure that you're able to do those things and also pay for the escrow.
Yeah, no, absolutely. There's very few downsides to having a mortgage escrow account. Do you have any examples of anybody that's been using the mortgage escrow account? Or maybe here's even a better question for you. Someone who chose not to do it and then decided they wanted to do it. Have you had run into that recently?
Yes, actually, I actually have run into that a couple of times. What happens is when you don't use it, you think, oh, I'm going to get this big bonus check in December, and then so when taxes are due, at the end of November, I'll be all set and ready to go. But sometimes those checks don't come in, and that's a big 12,000, 14,000 in some case, so $25,000 payment that needs to, go, and so what happens is a lot of people freak out. Some people call me and say, can I refinance to pay for my taxes? And yeah, they can, but you're paying all this money and you're doing all of this. Some people have to get a line of credit, to pay for it. So it's just better if okay, this is my monthly payment. This is what my monthly payment's going to be. When you purchase the house, we put all of that in as your principal and interest payment. So just keep it that way. Like, don't think, hey, my payment's only 2,000 and when it's really 3,000. You have to keep in mind that your payment is 3,000. All of that's included in.
Yeah, no, that's a good point. Um, as far as, keeping in mind that you don't have to have those huge balloon payments at the end of the year. Like I said, here in South Florida, other parts of Florida, it's very different. You don't have the large homeowner insurance wind mitigation that we have down here, especially if you're north of the lake. But here in South Florida, it is very expensive. And so between that and the taxes, it can be a very difficult December, it could be a very difficult November, it could be a very difficult January when these bills start coming in and somehow maybe you're not as prepared as you thought you were going to be.
Yeah, health
Uh,
issues. I mean, there's so much
mm,
that can happen. And there's so much value in actually doing the escrows. You have the convenience, so it saves you time and effort and tracking due to the dates and making separate payments for taxes and insurance. You lower your risk. You're protected from the risk of those missed payments and the potential consequences, such as tax liens and gaps in the insurance coverage, which is what I was talking about. And sometimes what happens is if it overlaps, they actually give you a more expensive, insurance, which could be, thousands of dollars extra a year. You have the peace of mind in knowing that your property is actually safeguarded and financial responsibilities are managed. And
yeah.
and sometimes peace of mind is the best when it comes to owning a home.
It really is. The peace of mind of knowing you're writing one check or making one payment and everything else is taken care of. One of the questions I get also, Jolie, is okay, so maybe I'll do it now because my income is limited or it just feels better now. So maybe I'll go ahead and do the mortgage escrow. But there may be a time in the future I don't want to do it. I want to manage it myself. Are
Yeah,
buyers or homeowners at that point able to say, okay, I no longer want to have the escrow account?
absolutely.
And what does that look like? Is it a big
Yeah, and
process or is it just a few pieces of criteria and then they have to go in and have it approved?
yeah, so essentially that is exactly what happens. You would reach out to your mortgage, whoever's holding your mortgage, or what we sometimes call a servicer, and you'll reach out to them and let them know that you would like to request having that off. They're going to usually ask for you to put it in writing, and then they approve it. And then once it's approved, then it'll hit your account so that you're paying less on the mortgage. The process itself takes I would say about 3 months to do. Um,
Okay.
but when you're going in, you actually want to talk to the servicer themselves in the closing and escrow department. Otherwise, you'll get looped around with payments and whatever. So to save you a little stress, just ask for escrow directly. But yes, it is possible.
Okay, that sounds really good. And I imagine because we are talking about a lender and a lender does want to mitigate any risk, they're probably going to be looking at an equity position of maybe 20%, meaning that your loan to value is no more than 80%, and most likely no delinquencies either, no late payments on anything.
Yeah, it's all done on risk. So if they can show and you can show that you're responsible and that you know how to handle your credit and you know how to handle your debt, then they have no problem doing that. So that's great. Like like Athena said, if you have missed payments and you're barely struggling to hold on, they may actually deny that. So you have to have that good credit history and all that with them
With them.
specifically.
But it is an important piece, so I appreciate that piece of information. The other question I get is, will my escrow go up? Or will it go down? Does it adjust? How do I plan for this? Can you go into a little bit why we see fluctuations in escrow amounts every year?
Yeah, that's a great question. I was laughing about it with a friend the other day because, when I first bought my house 11 years ago, I actually got a nice $650 check in the mail because they they took too much escrow, and so when they paid the insurance and they paid the taxes, it was actually already, they had an overage. So they sent me a nice $600 check, and I was like, oh, this is nice. But now with all of the hurricanes that are hitting, all of like the flooding and and the disasters that have been happening in Florida specifically, our insurance just keeps going up and up and up and just creeping up and up. And same thing with the taxes. Everyone that's
Yeah.
moving here is really great and wonderful, but what happens is the more people, the more schools they need, the more infrastructure they need. So what ends up happening is that your taxes are going up and your insurance is going up. And so, of course, that monthly escrow will go up as well. If we platform, I always suggest, and I tell people all the time, every year, have someone else look at your insurance policy and say, hey, is there any way that we could get this done cheaper than what they're doing for me? Even if you just say, okay, A, B, and C said that they can get it done for this amount, and then you go back to Allstate and they say, "Oh, we can do the same as ABC," and so you're kind of getting it. So you definitely always want to shop those monthly fees. But yes, there is a time, and there are times like this where it will go up. So you just got to kind of prepare for that. That's why when people buy houses, we make sure that you're only getting, you're only using 50% of the income that's coming in for your housing expense, just so that you can prepare yourself for when that does and if that does happen. You also have to keep in mind with amortization, every month it starts to go down and down. Unfortunately, it's not as much as the taxes and insurance keep going up, but it kind of eventually will start, balancing itself out, 5-10 years into the loan.
Okay, no, that's really good. And I would imagine that every homeowner who has an escrow account will get an accounting prior to the change in their payment.
Correct. Yeah, usually
Yeah.
that 3 or 4 months in advance. Yeah, so you can
Oh, that's
shop
plenty of
and,
time
and do
to,
all
yeah,
that.
that's
Yeah,
plenty of time to
exactly.
either shop for rates or, and we're talking about mortgage rates, we're talking about insurance,
Insurance.
shopping for mortgage, insurance rates, or, really starting to plan out what that extra monthly cost is going to be. So, Julie, this has been really, really informative. Again, mortgage escrows, a really important topic for home buyers or home buyers who are financing, I should say, to really understand what their alternatives are and what the benefits could be. So, really, the only negative I see is that maybe you're tying up some income that you could use in the future. But for, I would say, the majority of buyers out there, a mortgage escrow account, you're getting a better rate, you're
Correct.
getting peace of mind, you can plan out financially, and all your payments are made on time. So there's
Correct.
really no downside to having a mortgage escrow.
Because you're going to pay it anyway.
You're going to pay
you
it
might as
anyway.
you might as well budget
That
it
is,
into your monthly.
oh, that's the closing comment, I suppose. Get the mortgage escrow. You're going to pay it anyway.
you're going to pay it.
Julie, would you have any closing remarks or thoughts or anything you want to talk
No,
about
I
going
just,
on at Radius?
yeah, anytime when you're purchasing a house, it's very important to dive into like those closing costs and what that's going to be. Your escrows are a very important, aspect of it because you have to pay a year in advance on your insurance. So you got to make sure that you're knowing that before you come in. You're going to have escrows, you're going to have closing costs, you're going to have the down payment, and all of that is separate. So, sit down with Athena, break down, what all those fees are going to be, and then we'll make sure that we can move the finances so that we can make it happen.
I love it. Thank you, Julie. You're super.
Always a
So that's
pleasure.
Julie Dinda with Radius Financial Group. Thanks, Julie, for being on the show. I really appreciate you, and we'll see you next time.
Yes, always a pleasure. Have a great Monday.
Okay, bye.